Good day, folks. These are the instructions for Application Project 2, Managerial Accounting Summer 2020 at SUNY Geneseo. Key points. This is worth 10 points of your grade. It's due no later than 11:59 on August 6, 2020. At this point, you have everything you need for the rest of the semester, so you can finish about as your leisure, but no later than August 6th. If you do complete it earlier than August 6th, please send me a brief email so that I can check it right away and we can finish things up. Grading, very similar to what I did last time. Basically, how do you organize and present it? This is so important to be able to present things in a clear, easy to understand way. Don't assume that I know anything. Accuracy of what you do, clarity and depth. Okay, a lot of times, the deeper you go, you have a better understanding. But sometimes when you make a statement, it's really asking a question. If it's asking a question, you need to answer it. How well have you pulled everything together? How does one area impact another? How do they relate to each other? And that becomes an important aspect of this project. It's 10 points. So here's the situation. You are a summer intern for Mr. Moneybags. And as a summer intern, he is giving you certain projects to work on. The first project, number one, is he owns Geneseo Coffee Company, and the plant manager wants to buy a new machine. He asks you to evaluate it for him and make a recommendation. He's a stickler for details. He needs to see everything. But his eyesight is not good, so your report must be very clear and use images. He gives you the following information. The plant manager wants to buy two machines. One costs $450,000, machine B $650,000. They're both going to last about 7 years. Machine A will produce $1,719.24 per year for 7 years, and machine B will produce $267,352 per year. The company's cost of capital is 10%. So he's not too sure which one to do. He likes the 450 because it's a lot cheaper. So what he needs you to do is compute the simple payback, the net present value, and internal rate of return for each machine, and then make a recommendation as to what machine is best. And I want you to assume no tax impact. So that's project one. Project two, he has a grandson that is on social media, Twitter and Instagram, and he's seeing a lot of comments about American Airlines, and he tells his grandfather to buy it. But his grandfather is concerned about the decline in passengers and its impact on profitability. When he goes to look at the income statement and expenses, this is what he sees. So you have an income statement and the expenses. Now, for project two, he wants to better understand these costs. So we ask you to prepare an analysis of cost to see how they change in relation to both revenue passenger miles flown and available passenger miles. Create a chart to show him which costs are variable or fixed. Then identify what are the direct costs of flying and what is overhead. You may need to make some assumptions here. Just show them. If the revenue passenger miles were 241, 252 million, what would be the cost per seat mile? So he has all of these expenses. Notice they're not organized by cost of goods sold, so you have to go by and identify them as to what they are. Are they a direct cost, an indirect cost? Are they overheads? Are they fixed? Are they variable? So that you can come up with what the revenue passenger mile, the cost per seat mile. Okay, so once you know what that is, what he'd then like you to do is, based on the information shared above, okay, you got to put all the pieces together, assume a 40% and a 60% reduction in revenue passenger miles. Okay, Then forecast what is revenue, expenses, and operating income. So you're going to have 3 lines. You can disregard cargo and other. Just focus, leave that as it is, but focus on that passenger revenue. You've already identified the fixed versus variable costs and the direct costs, and come up with that. Now, revenue passenger miles, I told you here, they're 241,252,000. So what you're going to do is, after you have that, you're going to prepare this forecast, and then you're going to make a recommendation or tell Mr. Moneybags about what you did. So this is Project 3. If you have any questions, please feel free to let me know. Thank you.